Good morning, everyone. Good to see you all today. Welcome to the room. It is Monday, January 6th, 2025, the morning session. Welcome. Good to see you all. A little bit of strength here out of these markets in overnight and pre-market trading, with the ES and the NQ both beyond the previous week's high prices, kind of held there heading into the RTH Open, but then we're able to push through here on a recent drive higher off of intraday VWAP. The YM is closing in on the previous week's high. It's still a little bit higher here. 43,420 is the previous week's high, as you see right there. Actually, no, it's not. That's the wrong one. That's your H5 level right here. This is the level here. That's 43,380 basically. That's your previous week's high. Maybe looking at a push into that level here pretty soon. But the early thought this morning here, this trend very, very bullish and not to be faded as of right now. And instead, with the slope of VWAP, bulls will be looking to defend pullbacks. And you can see the first rotation into VWAP here defended right at the RTH Open, and we've seen already a very nice follow through to the upside. I mean, that was like a 45-point rally off of the pullback low in the ES. Over here, this thing rallied over 200 points off the low. Very nice bounce. You can see the double bounce here off the YM to new highs. Even crude oil bouncing here. This was prior to the RTH Open. But bouncing off VWAP and the previous week's close. So very bullish overall. But one thing I noted here prior to jumping on was these outside reversals and wick reversals here. How will the market treat those bars as we head into the new hour? Typically speaking, you know, these types of reactions, rejections, you like to see it after a pullback. I don't like to see them so much at a high because they could lead to failures here, and a failure would occur through the midpoint of those rejections. Right here, those rejections and those midpoints both coincide with the previous week's high. So if price were to fall through those levels in the current hour, this current hour, that could lead to a failure, and we could see a rotation perhaps back into 6,000 and into the previous week's close for the ES. Same thing down here back toward the previous week's close for the NQ. As of right now, still showing strength after the development of those patterns here, still an upward slope, and the follow through has been very bullish here since Friday's rally. Friday with a big time rally. That was the second trading day of the year. The first trading day of the year was Thursday, and that was decidedly bearish, and that's what we were looking for, was kind of the pullback and drop on the first trading day of the year. We got it, and then we were looking for the same thing on Friday, a pullback and drop, and instead it pulled back and followed through to the upside, and we've seen a continuation here to begin the new year. Looking at the higher time frame charts here, let me bring this over, the ES. You can see how bullish this two-day move has been. It's shaken off the first day selling pressure, which was again Thursday, Friday strength, and now here Monday, Sunday, Monday strength to the upside. It's through the previous month's midpoint as well. Big time level there. One thing I mentioned heading into this month was any pullback into this pivot range will likely be sold for a drop into new lows. And it was sold only the first day. Second day, it broke that relationship and closed higher. Friday, a big time bullish day. A lot of strength across a lot of different industry groups. We followed those here on Friday. And then we've seen the continuation here through the previous month's midpoint, which kind of breaks the relationship as of right now. As of right now, it's breaking that kind of bearish bias and opening up a new bullish bias as long as price can continue to hold above that mid from the previous month. Now, we're still kind of in that downward trending phase since the mid-December highs. That was the 18th right there. Big time selling pressure in the final 2 hours of the day that day. Price then kind of battled back over the next week and then fell again into the end of the year. As we discussed here, we were looking for price to maybe see some strength here into the end of the year. First couple of days of the new year just didn't pan out that way. But the overall trend remains up, but clearly, you know, things have stalled a bit here recently. So it'll be interesting to see how we continue to open up to begin the year. A lot of different industry groups that we've followed here have started actually very bullish, and we've been wondering how the market was going to respond here to those groups, whether it be the nuclear group, the space group, miners, Bitcoin miners, and the quantum group. Those are a lot of groups that we've been watching here lately, and then some of these story stocks that we followed as well. Things like SMCI, Nvidia. How are those going to play out? Right now, very strong is the answer, at least over the last couple of days. So very, very bullish. And with the uptrending channel that we have here, are we embarking on a new push to new highs up ahead? You can see this channel has been firmly in place. We've seen the pullback, kind of the double bottom that's played out here, and now following through the previous month's high. So, or previous previous month's midpoint toward the previous month's high. So we could be looking at new highs up ahead if this breakout remains intact. So some thoughts right there on the ES here. The NQ looks very similar, but these are out to a strong start. The ES right now has a current range of 78 points so far for the day, 78, 75, and that's 83% of average, although we've had a very high range average lately. On a 5-day basis, this thing's averaging 100 points per day. On a 10-day basis, it's averaging 95 points per day. That's a lot. That is a lot of points to average on a daily basis here for the ES, even at these price levels here. That's a lot. So, you know, to average 100 points per day on 5 and 10-day splits, you wouldn't necessarily expect that to keep up. One thing we did mention late last week is when you have ADR values that are this high, it usually coincides with weakness, because when you're trending up, the volatility drops, and then once the volatility picks up, it coincides with weakness and a pullback. But is this weakness shaking off here, or does that suggest more volatility to come? I can't see, you know, this volatility lasting much longer. If we start to follow through to the upside, I would anticipate that this starts to come down a bit and we start to average back toward 50 points per day, something like that, as this thing trends up. If we are going to follow through back to the downside, then this could indeed remain higher volatility. So that's going to be something to keep an eye on. But as of right now, this is looking rather bullish, with a push through the previous month's midpoint, a follow through in the direction of the medium term trend, and we could be looking at a retest of the Fed level up above at 61.36. So that's your FOMC key level right here, offered immediately, and a failure to get new lows here perhaps suggests a snap back to that level as a short-term swing target. If you look at the NQ, very similar as well. You see the initial FOMC key level going offered that day on a lower high. That lower high should, quote unquote, should have led to new lows, but the fact that it led to a double bottom here, you're snapping back, and perhaps that 22,288 target could be in play. We're through the previous month's midpoint, and the upward sloping trend remains firmly intact as of right now. And again, holding above this level would suggest a push that takes us to new highs as well. Previous month's high, previous quarter's high, and the previous year, month, and quarter all are the same level. 22,450 could be in play. That's assuming that we can hang on to these gains by the end of the day. If this thing craters late in the day and we fall below the day's midpoint and close below, that could be a tremendous wick reversal and lower high event that would then open things back up. So you got to maintain these gains into the end of the session for this thing to continue to play out in this manner. So very bullish here for those markets. The RTY right now up 0.9%. This one saw a fairly bearish finish to the year, and really right there, that's the end of November here, and you can see how bearish that was. A very bearish close, the midpoint of the month way back here, and we've started higher, but not really quite as bullish as these other markets right now. Again, RTY can tend to be kind of the early canary in a coal mine that can tell us that things are turning around, and it was one of the first to start dropping, in addition to the YM, and you can clearly see the weakness that we finished the year on. This pullback here is still inside the lower value relationship of the pivot range, and bears could still defend that again for another rotation back down. So we're going to keep an eye on RTY from that perspective as well. The big level here to continue to watch is going to be 2320. That's this key range high right there. 2320 half. That's the key range high. Your key range low is down here. That's your, right around that 1998 level, 1999, somewhere in there. And then you have the midpoint of the range right here at 2156. That's a key range. That was a 4-day impulse move. Strong high, and then you had that flash sell-off over the course of 3 days, and then a snap back to the middle. Remember, when we developed that low, we thought that we had an impulse move locked in. You can see we forecasted the midpoint that same next day, and that meant that we were looking for price to snap back to the 2156 level over the course of the next 1 to 2 weeks to give us a key range, and it did. Now that we have that key range in play, the key levels are very, very important. And you can see how it pushed through the top, tried to make a retest hold, and it did. Higher high failure back to the level, and then failed back below it. Now we have resistance at this level. So if it can't get above 2320 here, maybe another rotation back down could be in play for RTY. So some thoughts right here as maybe RTY continues to suggest weakness up ahead. In order for this thing to kind of turn around, you got to get above 2320 half. So that's an early key level to watch to begin the year. And then you have the YM here. Of course, the YM remains in a downtrend as well, something I mentioned in the pre-market video. This downtrend remains firmly intact here. And this pullback, while bullish to begin the year here, at least over the last couple of days, it's still in line with the downtrend, and we're still kind of below the recent pivot high, which is the 43,750 level. And so you got to really bust through that level. You got to bust through the previous month's midpoint in order for this thing to turn around. So RTY and YM are both still suggesting perhaps weakness, and this could be strength, a pullback within the downtrending market. Now we do have a couple of key ranges that are in play here. The most recent impulse move is this one here to here. So impulse sell-off, bounce back, and that gives us a new key range. We also have this key range back here, which I liked at the time, but I was hopeful we'd get a better one. This one right here is a great near-term key range that will be in play. And you can see the first trading day of the year tested the edge and bounced back. That's going to continue to be an important one here to continue to watch, but still in the downtrend. So, man, one thing that makes this year different than last year when we began. Last year when we began the year, well, both years we kind of had an upward move here, and this one finished the year at the highs of the year. This one we're kind of doing the same uptrend here, but we still felt like there was more upside to be had to begin the year. We were looking for any pullback to be defended here, but we didn't get a whole lot. Nvidia led us up right out of the gate, and then Bitcoin had its big move, and crypto in general. So we had a lot of catalysts to begin the year. This time around, this is a very mature up move that we've had over the past 2 years, especially from the Q4 low of 2022. This has been 2+ years of strength here. Is there more upside to be had right out of the gate, or do we need a bit more of a pullback? So it's a bit different this time around, as we've had a very mature uptrend take place, and that's why, again, it's going to be interesting to see how we begin the year. Now, JP did mention a little earlier the first 5-day rule. If the first 5 days of the S&P finish higher, YM I believe as well, if the first 5 days of the year finish higher, you tend to finish higher for the year 80% of the time, and that's since 1950. Great stat from the Trader's Almanac, and again, that's I love those types of stats. And again, it doesn't make them foolproof, but it just gives you the general odds there of what tends to play out. And as of right now, I know there's still most of the day to go today, plus a couple of more, but again, these markets are up on the year as of right now, and that's going to continue to be something to keep an eye on as well. But very bullish start here out of those markets. A quick look here at the intraday here. Still very bullish slope, so hard to fade into this strength right now. As I mentioned before, you kind of want to go in the direction of the flow of the price action, which means any pullback is a buying opportunity, especially the VWAP. VWAP is a spot to defend. If it did pull back into VWAP, though, that can be a pretty decent counter trend fade. So there could be an opportunity to take it back into VWAP, and then bulls may take it back up off that level. But again, to fade that type of move, you want a pretty decent reaction on the highs to fade. And right now, perhaps the YM providing the best fade opportunity, as it has had a little bit more of a reaction here. Crude oil turning down as well a bit. Crude oil coming within 1 penny of the 75s, 74.99. Crude here, if you look at the higher time frame, has been right in line with our projection here that we had higher to end the year. To end the year, seasonally speaking, we tend to rally, and then to begin the year, you tend to have the first 9 weeks of the year be higher as well. That takes you into the first week of March. Additionally, from a pattern standpoint, rounded bottom here, rounded bottom accumulation throughout much of the quarter in Q4, and now we've broken through the upside here. That all suggests strength ahead as well. We could pull back as deep as, say, 72s and still be a buying opportunity for a move to the edge of the key range. That's the October 8th high right here. That is 78.47. We're looking for follow through into that target ahead. And like I said, even if we pull back into 72s, 72 could be a swing buying opportunity for a push into 78.5. We looked at the 2-year volume profile late last week. The 2-year volume profile suggested a return to the top of value, which would take you into $80 as well. So any pullback here could be a buying opportunity to 78.5 and into 80 to begin the year, and that could take you into the first week of March here. So that's the idea for crude oil. We also got to push through the midpoint of the key range. That was the transition move right there. And that puts you into the upper half of this super large key range. Super large key range here. So we have some upside here in crude oil that could take us higher toward that 78.5. And I know many of you know this analysis here, just kind of recapping as we begin the year. We do have a holiday shortened week in observance of Jimmy Carter's funeral. I know it's been a multi-day type of thing that's been playing out. So let's take a look here at the economic calendar real quickly here. You can see right here, this is Monday. So Monday you have these items that have already come out, including factory orders here, 3-year note auction at noon, and then speculative net positions here, which usually happens on a Friday. On Tuesday, January 7th here, couple of 3 bull items here, job openings, ISM non-manufacturing prices, and non-manufacturing PMI are all on deck there. And then Tuesday, after the market closes there, API weekly crude oil stock. And then down here on a Wednesday, because Friday we have NFP, you're going to have ADP non-farm employment change here prior to the RTH open on Wednesday. You also have initial jobless claims, crude oil inventories there, and then the FOMC meeting minutes on a Wednesday, which could provide some juice as well. Thursday, you do have, is that initial jobless claims again? I wonder if they moved it up a day, because you have this here and that there. Of course, this is Thursday, holiday, U.S. National Day. So I wonder how this information is taken there. We don't really have a good basis here for this type of holiday because we don't have this happen very often. I guess the last time was President Bush Sr., which is the last time we had something like this occur. Now, Friday, of course, prior to the RTH open, we do have a ton of economic data points, including non-farm payroll, the first of the year. Usually you might have it on the first Friday of the month. It was pushed to the second Friday of the month. You can see 154K jobs anticipated here, previous 227, but we're going to see if there's some sort of revision there. There's been some wild revisions in that number here throughout the previous year. Unemployment rate, and then Michigan consumer expectation and sentiment there later on. So that's a look at the week ahead. And then the following week will be our first full trading week of the year. And then the week that follows after that will be MLK Day, holiday shortened as well. So that'll be January 20th, which also includes the presidential inauguration. So just a quick look at what's ahead there from an economic calendar standpoint. Now at the moment here, still holding at the highs, still an upward sloping trend. The YM here pulling back from the highs a little bit, crude oil pulling back a little bit. This is what it looks like in the 60-minute time frame here. Not a whole lot to go on this hour. I mean, we're 44 minutes into the hourly bar, and this is a teeny little hourly bar that's developed. This one's a small one here. We do have kind of a wick reversal that's developed here back to back in opposite directions for the YM. And then you can see RTY kind of working on a bearish hanging man pattern. The most bearish of the bunch, at least from that standpoint at the moment. So a little different look and feel on the right side versus the left side here of the chart as we open up. I think something to consider here is also the dollar. The dollar here finally showing a little bit of weakness comparatively speaking here. This thing has been gung-ho to the upside. hitting 109.50, major market structure level that hadn't been hit in a good long time. The dollar moves in $2 increments in terms of market structure. You got the 101 half down here and then 103 half. Then you have the 105 half here, the 107 half here, and then a level that hadn't been hit in over 2 years, 109 half. And you can just see how it trades off those $2 increments. It's incredible here. We're stuck right now between the 107 half and 109 half, but still maintaining an upward slope right now on the current trend. We had this as a squeeze candidate on this day when it looked like we were no longer able to drop. That's when we said a squeeze may occur up to the next couple of distributions, and if we were lucky, 107 half. This thing has bested that and gotten even beyond there, which is just incredible. You don't tend to see that type of movement very often. So we're in this range right now, but one thing that's been apparent, at least of the last month, is the checkmark rally in the dollar coincided with weakness, inverted checkmark weakness out of both the YM and RTY. So maybe we're getting some of that correlation back, especially the higher this thing gets. You know, the more bearish the market may get. But if we're able to see a failure of 107.5 and drop back down, that could coincide with equity strength. So if this thing falls through 107.5 here fairly soon, that could open up more strength across the board up ahead. So something to keep an eye on there. I did want to talk a little bit about Bitcoin and Ethereum. Bitcoin right now back to 103s. Back to 103s. Very strong move through the previous month's midpoint here. A change of bias and a strong follow through developing right now. As a matter of fact, this thing right at the RTH open jumped to the upside, took intraday VPOC bid, and is rallied back to 103s. This thing now through the previous month's midpoint. It was a higher value relationship for the month, but with a bearish bias on the close. Again, that would suggest any pullback be defended by bears for a rotation downward into that low at the very least. But it hasn't happened, and instead we're pushing through the upside. That would suggest at least a retest of the highs. 108.960. That's your all-time high. That's your previous month's high, previous quarter's high, and previous year's high. Do we come up here and get 110s? And how does the market react there? Because if it's a higher high failure, it could snap the thing back. If it busts through that level, then we have evidence for a 125K target. 125K based off the impulse move here. So very strong start here for Bitcoin. That's also lifting somewhat the Bitcoin miners. Marathon, CleanSpark, Riot all up between 2 and 3%. Cypher up 3% as well. But perhaps the most bullish, which is what I've mentioned before, is Ethereum. Ethereum is the most bullish at the moment, especially with regards to the Friday breakout. Down here we have our PivotBoss Advanced ADR indicator. It's set to 1 day right now on the reading, but if we make this read 7, this is the 7-day reading right here. And what we're looking at is this 7-day compression right there, and the reading is right here, right? You can see that all of this right here is below the lower red dot. The red dot down here is 65% of average. Average being that 10 period right there. So when you're below 65% of average and get this compression right there, that suggests that the market is very compressed against its normal volatility, and you should be looking for expansion up ahead. And if we get in a breakout move, you tend to rotate higher toward the 125% extension. So the upper red dot is 25% greater than average. And we got the breakout on Friday. That was your breakout move right there, Friday through the top of the 7-day compression. And there's a couple of ways to identify a target in this case. The way I tend to teach it here is kind of an easy way would be you take the breakout day low. If this is the breakout day, take the low of that day and then forecast higher the forecasted amount. And in this case, we could forecast to the 125 or to the 100% target. I went right in the middle and said, let's go 800 points. So that means from the breakout low, you add 800 points to it. The breakout low is 3450. So you go 3450, and then you add to it plus 800, and that takes you to 4250. 4250 would be your breakout target. And if this is day 1 breakout, today would be day 2. You got 3, 4, 5, 6, and 7. We should be looking at an upside target at 4250 sometime over the next 6 to 7 days. And that's how this thing's gonna draw it up. So if you look up here, that would be just beyond last year's high. Last year's high is right here at 41.42 half. 42.50 would be right in this zone, right in here. Can we make a move to 42.50 up ahead? So again, this compression with this breakout transition day from that low plus 800 points gets you to the 42.50 target. So right now, Ethereum's looking the best in terms of strength right now. Remember, if you're not in Ethereum, this could be a great time to be in for a short-term swing. You can buy it outright, or you can go to, say, ETH. That's the Grayscale ETF, and you can use the Grayscale ETF as a means to be in on this one. You also have ETHA as another ETF that could be in play as well. This is the iShares ETF, and you can see right here, this is your compression. You can go 8 days even off of that day right there. Here's your breakout, and you're looking somewhere between 4 and 5 points of range. Call it 5 points right here from the breakout low. What is that, 2650? So 3150, which takes you just above the high as a swing target. So this could be a great breakout opportunity up ahead. Ideally, it can maintain a bullish confidence here and make that move to the edge. So ETH looking really strong. Bitcoin looking really strong right now as it has recovered 103s. Really solid follow through. Now the other thing that I liked about this, we talked about on Friday, was right here. That's the 8-period average. The 8-period pivot-based EMA. It took it offered here and was rejected. Each of these times here, rejected here, and then it took it bid on the first trading day of the year. That was Thursday. And then on the second trading day of the year, it pulled back to it here, held it, and rallied. And that is a bullish change of bias on the 8-period on a short-term rotation basis, and that can tend to lead to strength. And you can see the follow through here today for this one. If you look at ETH, similar there as well. So right here, let's zoom in. There's the 8-period going offered on Fed day. Drops, 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 holds, holds, holds here. Took it bid here barely, comes back, holds it, and launches, and now we're launching again. So that's a very bullish recovery of the 8-period average and suggests strength, suggests a follow through to the upside, ideally to go retest the high. So that's what we're looking at right here for this market. Could be very, very solid out of those markets. So that's a look at a lot of the futures that we've been following here. The last one here on the list that we'll take a look at is gold. This one is off the lows of the day, and it's been very choppy. Man, gold has been aggressive in both directions here lately, but hasn't really gone much of anywhere. It's it's been up hard, down hard, up hard, down hard, but still just kind of sitting in this middle chunk right here. And that can be tough from a swing perspective. It can offer opportunities on an intraday perspective. And it has maintained a relatively high-ish ADR. It's averaging over 30 points per day on 5 and 10 day splits, right around 31. So it's exactly 31 days on a 10 period average basis, and then it's 31.8 on a 5 period average basis. So about 31 points per day. Today, 39 points. That's 126% of ADR, so it's higher than average. But each of these last several days have all been higher than average as well. But you're not really going much of anywhere in terms of directional conviction here. It's just kind of sitting in that middle chop. So this one is kind of stuck between two major extremes. We've talked about those extremes a ton here, 2540 up to about 2800. That's your range. You got the middle portion of the range somewhere in this zone right here, and you can just kind of see how it's getting stuck here, stuck here, stuck here. And at some point it may make a move to go to the top end of the range or to the bottom, and then that could be a fade back to the middle here, fade back to the middle. Until then, we're kind of back and forth stuck in the chop. But the intraday price action could be good. It could be really good inside this middle area. If you get to an extreme, it's a intraday fade back to VWAP. If you get up, intraday fade back to VWAP. And as of right now, there has been some decent fades. If you look here at GC, using the bands, for example, the recent move has been this is S3 right here and bouncing back. This is R3 and dropping back in, and it's stuck, kind of at the middle right now with a relatively flat VWAP. So you can fade those extremes. This is also H3 right here on the way down. So the Camarilla signals can provide some opportunities there. These are the H4 signals as well, so they're doubling as S3 H4s for right now. Oh yeah, crude oil making quite a move here, reversing back down the way. You're right. That's a pretty strong reversal right now. That's an outside reversal for the hour. Does that trigger a little bit of a pullback towards 72s over the next 1 to 2, 3 days? Because that could provide a tremendous buying opportunity on a swing basis. This is what it looks like on a 60-minute time frame for crude over the last several days. Still trending up. Right there, still trending up. But clearly a pretty aggressive hourly bar right now to the downside for crude. We have 40 seconds until the finish of this hour, and look at that. Teeny hourly bar here, teeny hourly bar there. Fairly big wick reversal here. If this is going to remain bullish today, you may go failed new low outside hour up in the next hour. If we're going to kind of pull back some, then we may go opposite and maybe outside hour down. So which way do we go first here after these narrow hourly bars? It finishes right about now. There we are. New hourly bar is developed. So that's a big recap of a lot of different futures here. I know there's a lot of stocks that are moving as well, especially from our watch list of which has grown tremendously here lately. Let's take a look at some stocks here. The Texans beat the Oilers, yes. You know, man, I'm telling you, obviously the Oilers, growing up in Houston during that time, the Oilers were my team and loved the Oilers back then, loved Warren Moon and some of the great players we had on that team back in the day. I think, you know, the Titans have worn those uniforms a few times now against us, and, you know, I think, I don't know, it's hard. Everyone has a different reaction to them in Houston. You know, they either still love those uniforms, or brings back nostalgia, or kind of don't care anymore that they're wearing them now because we got our own thing that we're trying to build. But man, I tell you, the first time I glance at them on the screen, I still get that nostalgic kind of feeling like, man, those are beautiful, beautiful uniforms. But it is kind of cheesy that they're wearing them. It's kind of odd how their own owner continues to try and twist the knife a little bit there, and people in Tennessee don't really care at all, because she's trying to force a Houston legacy onto Tennessee fans, which is kind of weird. It is kind of cheesy, but it's nice when we beat them in those uniforms. And of course, we beat them with our backups too, for the most part. It was fun to put it on them a little bit. But the playoffs are set, y'all. The playoffs are set. Congratulations to JD and his Chiefs earning a first round bye. The Lions took out the Vikings yesterday to earn a first round bye. That was the first time ever that two teams played to combine for 28 wins on a season and then play. That was incredible. And they were playing for a first round bye, and the Vikings dropped to the 5th seed. That's incredible, even though they both had the best records. But the first round bye goes to the Chiefs. And if my Texans can take down the Chargers here, it's going to be a second round matchup at the Chiefs, Texans and Chiefs. I don't want to look past the Chargers. We're limping into the playoffs. But, you know, a lot of teams are limping into the playoffs as well. The Chargers haven't really played a whole lot of good folks, but you know, Harbaugh has that team playing well right now, or at least playing well this year. They've underperformed a lot in recent years, especially with their quarterback and some of the players they have. So they're coming into, you know, our house, so that's going to be something hopefully that helps us. Our defense plays tremendous at NRG Stadium, and has made really good quarterbacks look foolish in our stadium. Our defense is very opportunistic. Our offense has not been really good, so we'll see what happens there. But I'm not feeling super confident, but I'm also not feeling defeated here. So we'll see. The better team will just have to win, and that's how I feel Friday too. Ugh. Friday and Saturday is going to be tough for me, y'all. My Longhorns are going to be playing Ohio State Friday, and that's going to be tough. You know, we haven't played our best ball the last few weeks, the Longhorns, and it looks like right now Ohio State's playing on a high. So we have our work cut up for us here Friday and Saturday. We'll see. But whoever wins has to go to the Chiefs. Yeah, that's going to be tough there, JD. So good luck to your teams. The stage is set. Eagles, number 2 seed, going against the Pack. That's going to be a good game. How about the Commanders getting in? Jaden Daniels, first-year quarterback. He's looked really good. Their offenses look really good. Go against the Bucks. They got a good shot there. Vikings and Rams going at it. Broncos making it in with Bo Nix. Bo Nix playing really, really well this year for a rookie as well, going against the Bills. That'll be a tough go at it. And then Ravens and Steelers. Ravens and Steelers, y'all. I tell you, man, that's going to be a good one. That's going to be tough, but Ravens have been playing really, really well. I mean, they took my Texans to the woodshed on Christmas Day. So, that's going to be a tough one. But yeah, Chiefs and Lions, first round buys. This is going to be a good one. This is a good slate, y'all. I think Dale's had enough championships. He's good. He's good for a little while. I mean, man, you got the football championships. You got, I don't know if you're a Sox fan, but you know, they've got plenty to go around over there. Don't they got some hockey stuff going on there? I mean, they've won a ton of things here lately. They're good. Oh, it was one of the first firings though. OJ Mayo out as head coach at the Patriots, and this is going to be, man. Didn't the Pats beat the Bills yesterday? If they'd have lost, they'd have got the #1 overall pick. There's no consensus #1 really though, is there? So I guess you get 2 or 3. Tennessee Titans locked up the #1 overall pick. It'll be interesting to see which way they go and how that shakes out. But right now, it's all about the playoffs. Let's go. Tomlin going to Dallas. Oh, man. That would be really weird to see him in different color uniform. Okay, let's look at a few stocks here. A couple that jump right out of the gate here. #1, we're seeing some strength out of nuclear. That's going to be a group to watch again this year. And we'll start with the granddaddy of them all, SMR. This is the one we had all of last year as a big-time mover. And again, you know, we had this one on the radar in March of last year and then had multiple opportunities for free trades along the year here. The most recent was the retested $8. We mentioned on the pullback that if you get a retested 8, it could offer an opportunity back to 16 for a free trade opportunity. And if you're new to the room, a free trade opportunity would occur if you're able to get in on a stock at a certain price and you can get it to a double, and at the double you sell half your position, and now you have a completely free and clear trade. You've taken your original investment out and now you're holding a second half of the trade that is free and clear using market money. And at that point you can hang on and let it develop into something significant over the next several months or even years, in the case of something like nuclear, which may have many more growth cycles to go. So this was the original one we seen. From 8 though, not only did it get to 16, but it opened things up to 32. So it quadrupled off these lows, which is significant. I mean, what a move this thing had. We had it as a buy the dip candidate right here as well on the pullback. And again, that was an opportunity to go hit 28s, but it went even beyond that to 32. And the reason we had those levels picked is because this market moves in $4 increments. At least it did early on. We might open that up a little bit now and see if there's new increments that start to emerge. But look how it held 8 and went to 12. Then from 12 it busted through 16 to get to 20. Then up to 24, here's 28, and then double topped at 32. The recent double top has let it back, and we mentioned, man, if this thing can get to 16, or better yet, does it get back toward value here around 12 to begin the year? How are they going to treat this group to begin the year? And the answer here is rally it big time on Friday and extend it here on Monday. So big time strength from 18 back to 23.5 right now for this one. This one's starting the year strong here already. Nuclear, a big time group to keep an eye on throughout the year. And again, if we're able to see some sort of pullback at some point in Q1, that could provide an opportunity for another free trade and perhaps some great swing moves at the very least on buy the dip opportunities. Another one in the nuclear group is Oklo. This is one that we found on this rounded bottom here late on that month right there, and days later it exploded to the upside and doubled. So this one came out of the gate hot. Since then has developed a great range up here, and then look at how it started the year here. This one's already rallied 22 just from Friday's low to 31 right now today. So again, they're starting this thing with big time strength here, and we're seeing massive movement already. This is a key range right here that we've had in play since October. And look at the key range lows here and here. Most recently, I know Dwayne mentioned the key range low test there. And so far, just from the key range test low here, we've nearly doubled again. We've gone about 90% of the way to the upside. From this key range, we have a target at 38.64 on a 100% target basis. And so at 38, we mentioned that 19 would double. So any entry at 19, and recently it has rallied off that level as well. So really strong stuff out of Oklo to begin the year. Another one that's in our nuclear group is Lightbridge. This is a different nuclear stock, but in the group, this is kind of a nuclear consultants, and also provides plans for nuclear fuel reactors. So this one's in that group as well, and we've seen this one early on. Again, it was I didn't even know what Lightbridge was, and then on this day right here, Peter brought it to our attention there, especially on the pullback day here, and then we seen this thing explode to the upside from those levels. So this thing was trading $3 and then rallied to 14, and we followed ever since here. So Friday, a big day for this one. Hanging around value at the moment, but this is another one in that group. You also have NNE as a nuclear stock. We had this one also on a rounded bottom here right around this day here, and it doubled that very next month. It has been more kind of normalized here compared to the regular stocks we've been looking at. Some of those stocks have really been moving fast. This one has been just kind of consistently sideways to up, but moving some points. When we first saw it here, it was about $14, and it quickly went to 28 here, got as high as 34, gave us a new key range, and this one's starting the year hot as well. So several good stocks there, and there's likely more that we'll find up ahead. So those have been some really good ones here that we'll continue to follow. I did want to also talk SMCI real quick. SMCI has started the year strong. Obviously, this was a story stock to begin last year. Tremendous movement out of this one. And then it hit a rough patch here. It started to drop. And on this initial drop here, we mentioned don't touch it until it hits 35. And then you have a shot at it. But then the day it hit 35, it gapped through 35 here, and we mentioned, this isn't holding there. Wait till 20. 20 is the other side of the recent market structure, and that's about as low as it went. I mean, it spent 2 days below 20 only, into 17s, and then more than doubled on a bounce back. Pulled back to 30, and we talked about 30 providing an opportunity. At 30 bucks, you can get this thing back to the 200-day moving average and be a free trade. This one still may not be fully out of the weeds. It obviously has had super negative headline risk. Maybe some of that headline risk is shaking off now. It still remains to be seen if that's the case. But at these prices, maybe it can still provide a decent opportunity longer term, even if it's just get to a quick free trade. Now at the moment, you're still kind of in this compression here and building some energy. I would still love to see a discount of some sort. Not sure if we get back below 20 again, but if this thing were to test a lower low here into the previous quarter's low, that could be a home run, high reward, low risk opportunity for something like this down the road. So keeping this one on the watch list, even though it's had some super negative headline risk, even perhaps delisting potential, but it looks like it may have pushed past that for now. And as of Friday, a lot of different news here, but as of Friday, this is what whales are betting on Supermicro computers. So you can see investors with a lot of money to spend have taken a bearish stance on Supermicro, and retail traders should know. We noticed this when traders showed up publicly available options history that we track here at Benzinga. So as of right now, still negative headline risk with heavy bearish options. Open interest for this one right now. So again, maybe there's still some downside to be seen out of that one. So we will see right now how this one goes, but because of the negative headline risk, it'd be nice to see this one kind of pull back if you're going to look for an entry in this one, because if they do snap out of whatever funk they're in and get going, it could see a recovery that's fairly aggressive in a short amount of time. But again, I call it a high reward, but also potential high risk as well, depending on the entry price. But yeah, keeping an eye on that one there. Now, man, one of the ones that continues to show significant movement right now, and it is off the highs of the day, is Serve Robotics. It did hit a strong pivot high, hit a new all-time high today, and then has turned down tremendously. It came out of the gate with a 20+% move. It's now up only 9.5% right now, and just put in a strong pivot high. Oh no, we'll do Tesla here next, and Nike. Yeah, thank you for those. Now, again, caveat here. I know some of you have been out for the holidays and in and out here, so if I'm kind of a broken record here. My apologies here as I continue to cover some of these. But Serve Robotics has had quite the movement here lately, and I'm not fully sure of the long-term potential of this type of stock, and I've shown the website for this one a couple of times here. But Serve Robotics is basically this, where it's kind of like a DoorDash, a robot DoorDash here, robot Uber Eats, where you have this little robot here that will deliver stuff to your door. It just this little guy on wheels here, and I think it probably has some good potential in certain areas. I don't know how good it's going to be in all areas, but you can see right here on delivery, it's got this little LiDAR or whatever this is, and then it drives itself to the location. Somebody used their phone, they open it up, and you get your food out of it, or groceries, or whatever's there. So that's Serve Robotics, and again, not sure how much longer term potential it has, but it definitely has short term volatility, and just with that short term volatility there's potential. I mean, just this year alone, 13.5 to 24 in 3 short days, so there's definitely bullish potential there. And with that, you could likely use that volatility with options to really squeeze out some moves. So I'm keeping it on the watch list as a volatility type of play. As of right now, it's putting in a strong high, and I would say that there's a good shot for this one to drop back toward the 18s. You have this impulse move from that low to this high. That's your impulse rally, and you likely, if today's a day one rejection, you snap back to the middle of that range, and that'll be 1850. So that could snap it back, and at the very least you could be looking at a short-term short opportunity. You could be selling the $20 call spread, for example, and watch this thing drop back down and take that on a short-term basis. There are 4-day to expiration options to utilize that approach. And let me see here, if you do like a sell vertical, and let's go 20 to 25 here. The credit isn't that much, $1.60 right now, 4 days to expiration. The 20 to 25 call spread, $1.62 credit, and right now you're $1.30 above it, so you're trying to get this thing to drop through 20 and close lower for the week. So that could be in play. And let's go ahead and draw up that key range. Let me see. First, the low, 1335, and this low is 1340. So you're using this pivot low here, which is 1335. And then draw this thing up to the high. Today's high is 2435. The midpoint of which is 1885. I'm going to drop that pin right about here and make that 1885. And that's the target right there from a short-term basis to give us a new key range. And if we get that key range, I mean, is there a chance for this thing to go all the way to 35 bucks? Perhaps it can get there. But I would say at some point maybe a retest of 24 might be better. So if it drops down to the key range low and hits maybe the 25% extension, you trap between 10 and 12 bucks and return it up to 20 bucks or 24, and that could be a great opportunity there longer term. just to have a free trade and see if this thing matures. So we'll keep an eye on that right there. So I just wanted to talk about this one a little bit, hitting a strong pivot high and perhaps putting in an impulse high that could get us back to the midpoint. Fading the $20 level could be in play. Yeah, Lou, that was my first impression too. If you see one of these things rolling by, even you say homeless here, even if it's like kids, I mean, just kicking it over, and it's like a turtle that just can't get back up. You know, it seems so vulnerable out there. I don't know. I don't know. It's kind of we'll see. We'll see. But it's definitely had some enough volatility to at least trade. And it's come out hot here today. Oh, I will post this. I'll take a screenshot of my current watch list here. What I was going to do was put a watch list together for translate this to the Outlook and put an Outlook watch list up that we'll cover and post that alongside the monthly Outlook. And the monthly Outlook is tomorrow. The monthly Outlook is tomorrow. I'm trying something different this time around. I'm going to try a couple of things differently for the Outlooks here. Tomorrow's Outlook will be held here in the room. So the way that you're logged on right now to the screen share is how we're going to do the Outlook tomorrow. We're just going to do it from our normal premium screen share, and that will happen tomorrow at 3 p.m. So that's a different starting time tomorrow. Doing it a little bit earlier, trying to keep it at 2 hours. It's going to be kind of a marathon. We just have a lot of charts to go over. This is almost like a pre-Outlook today as we kind of catch up to some of the charts we're looking at. But we're going to go 2 hours tomorrow from 3 to 5. And that will be recorded and posted for playback as well. The recording will be posted late tomorrow evening, and I'll post that out on YouTube as well. And so, you know, I know sometimes 2 hours can be a long time, and some of you love that. Some of you might find it kind of long and cumbersome, but you can always use the playback speed to make it say 1.25 or 1.5 playback. I'll sound like a chipmunk, but it'll go by a little bit faster when you watch it in replay. I really like to use the 1.5 speed if I can. Other times you may not want to, depending on the content you're looking at. But replays, you know, you can really get most of what you need by going and replaying it faster. So tomorrow, we'll be doing it right here in the room, 3 o'clock p.m. Central. So right when the market closes, we're going to jump right on. And mainly I'm doing that here because my daughter has a basketball game, and it's an away game. So got to get it done and got to hightail it out of there to go watch her. It'll be her first game back since the concussion, non-concussion for her and another teammate, because they didn't have the trainers around during the holidays to get him out there faster. So she's missed a couple of games here. So it'll be good. Yeah, I tend to be, even now, I tend to be a little bit more measured in my speech as well. But I'll try to let it loose a little bit. Try to cut loose a little bit. Get a little wild with it. Okay, let's look at Nike, because I know Nike is one that we've talked about here recently. It had an initial reaction just shy of the 72s. We were looking for something into 70 last year, and noted that maybe we can get a move into 70 for a bounce. a good bounce too. And it just missed out on it here. It missed out on it again here. It started to bounce pretty decently and gave us a lower high at 79 and is dripping back down. The one thing here that's very interesting is the current pivots, right? It finished lower, and these right here, these are yearly pivots, I believe. Let's look. Yeah, these are yearly pivots. So that's the high of the year right here, and the high of the year coincides with CVPOC. This is your midpoint of the year, and that is about 89.30. And then look at where we closed in relation to the high and the mid. We closed way down here close to the low of the year. So whenever you close near an extreme of the overall range, ideally you'd like to take out that extreme. So what I usually say is watch for this thing to take out the previous low, and then right in here is where there could be a bear trap opportunity that flings you back to the previous mid. And that can happen in Q1 or in the first half of the year, and then you watch this thing make an attempt to go take out the previous high, and in that case we could have an outside year up. And what I really like about this plan of attack, if you're bullish Nike, is that this is 5-year lows right here. 5-year lows take you to 60. That 5-year low was basically your March, COVID March of 2020 low, where everything cratered. That's the low. And this is your little teeny piece of that action here. If you can get in that fat tail event, there could be a snapback to VPOC up ahead on a longer term basis, and that snapback to VWAP would coincide with an outside year up. That would be tremendous for Nike. There's three high volume nodes to work with. You have this one right here, which is about 76s, 77s, that thing right there. You have this one right here, which is about 94, and then you have the 107s here. So if it did drop into this zone, I would anticipate a snapback here, grind it out here, and then grind it out there on the long term here. So anytime we're closing near the extreme of a previous range here, in this case the yearly pivots, and you take that close offered, this is the one in sight right now. So can we drop here? Can we reject this area? And then we can return this thing back to the upside up ahead. So that's something to keep an eye on right there for Nike. Something sub 70. Anything sub 70 could be tremendous. This is your S25 for the year. Don't know if we get that low, but if we did, that could be an ambush entry back up. I don't know if we get that low. I mean, this thing had trouble even testing 70. So down here and back up to 89 and back against the high as well. Oh yeah, that was New Year's Eve day, and they didn't get busted up as bad as you would have thought. They lost by 15 against the powerhouse school there. Yeah, they lost by 15, but my daughter didn't play, and neither did another key contributor. They, again, both of them out for concussions. My daughter didn't ever have a concussion, but the other one did have a severe concussion. So both still didn't get to play, and I think they would have helped, but I still don't think they would have won, but they would have helped. Now Friday, they had a game Friday. They lost that game, and my daughter would have definitely helped. Both of those players, we would have beat that team. We would have definitely beat that team Friday. All the parents were coming up to us like, man, we needed Olivia in there. and they were all bummed. They couldn't believe that a doctor's note doesn't trump a high school trainer in terms of the concussion protocol, because the doctor cleared her like right away, but I guess district policy did not. So it was kind of odd, and everybody was kind of up in arms about it. But yeah, my daughter definitely would have helped beat that team Friday. But tomorrow's game is against an even better powerhouse, so her first game that gets to be against a team that's really, really polished. Already smacked them around earlier in the year. So yeah, it'll be fun. It's always fun to see the competition. So those are some thoughts there on Nike. Here's Tesla. So real quickly here on a 60-minute time frame, we did not go outside up in the NQ and the ES, but we did in the YM. So YM did what we just mentioned here, dropped, and now outside hour up already. That's the bullish scenario here. Instead, we're still kind of quiet. Quiet here at the highs, but still maintaining gains. After this much strength here, this early in the day, we may see this thing kind of quietly hold those gains and maybe finish strong. Finish strong on the day. And the YM also reaching the previous week's midpoint. Not bad. Not bad after finishing last week right at the mid. Here's Tesla. Tesla began the year on a bearish note. This one having a negative headline risk on the first trading day of the year, delivering less than 500,000 cars, and missing their projections here for the first time. And so that sent things downward 6% on the first trading day of the year. But it was a squat bar day. You know, so while it did drop, it maintained a squat bar, and then on a big time turnaround Friday, it was a stop run day back up. That helped lead the broader market to the upside. Today is kind of dark cloud cover hanging in there, gapping up but filling the gap back down. And this one's been a little tough here. It's been on a heater here lately to the upside. Remember, this right here was that narrow range price action. It gapped up after earnings, busted through the 280 level, and far surpassed our upside expectations for how far this thing could go. We had it on this day right here. On that day right there, we had that as a transition day to 340 and 400. You know, two market structure distributions up. And then it went beyond it to 460 and 488 half. So that's been way beyond expectations right now to the upside. Now on that day right there, we did call that a day one rejection. Day one rejection, and that was the same day as the Fed. Right, the same day as the Fed where everything melted down. So far that has been a day one rejection, and we've pulled back since then, but we're still in an overall uptrend right now. I'm still trying to figure this one out a little bit after it's made new all-time highs and rallied as much as it has. Recall, I've mentioned before that a lot of the strength we've seen out of this one in the recent couple of years, the strength has been a lot to do with short squeezes, right? Short squeeze, primarily, as I've mentioned before, Bill Gates getting squeezed in this stock. Elon has been very vocal about squeezing Bill Gates into oblivion, and for the most part, Elon wins a lot of the time when he's this hell-bent on that. So a lot of this aggressive movement likely due to short squeezes, but Bill likely re-ups. He probably, added back or whatever the case is over here. So there might be some counter trend price action that happens here. Maybe some backfill. I think 340 would be a big time level here. If we were to hit 340, it could be a snapback to 420 and a bit higher. It's hard to tell right now exactly how this thing may play out early, but one thing that we can work with here is an impulse move key range. And so there's two of them here to work with. One hasn't quite reached it just yet, but if we use the day one high to this low and the midpoint, that gives us a key range right here to work with. And then there's the recent impulse sell-off here and the snapback. Did that reach the midpoint? And I'm not quite sure if that one has or not. Let's just do some quick math real quickly here. In order to get the midpoint, you would add the high and low. So the high is 465.33. Add that to this low right here, which is 373.04. And then you divide by 2. That's 419.18.5. So yes, it did get the midpoint. It did get the midpoint. You could do this high, low, and back, especially because it coincides with the strong high, the day one high. I kind of like this impulse sell-off better and the bounce back. I kind of like that price action a little better. So I might use that one. So let's work with that one right now. As the impulse move, I am going to mark this high right here. Okay, that high, I just said it, but I forgot it already. 465.33. The low is 73.04. And the midpoint will be back in this zone somewhere. So let's make this a little better here. The high 465.33.04, and then the midpoint is 18.5. There we go. So that's the key range that I kind of like right now. And if you kind of zoom in and take away the recent wild rally here, you can see how that impulse move is really solid. This one's not bad, but I really like what this one looks like. So I'm going to use that one as the key range. And this is where a strategy can now come forward here, because we can use that key range to kind of project where it might be headed down the road. Can it get to 557s? That would be the 100% upside target. 557. Wow. This is your key range high, and look at the 25% extension. The 25% extension is in line with the all-time high. So if we get up into that zone, it might be a fade. Down here, that's your S25 trap. So if we drop into 350, 350 could trap and reverse it back to 420 and back to 465. So you're starting to see some blueprints pop up for how we could approach Tesla up ahead. It starts with the key range. We got ourselves a great key range here. And then one last thing, because remember, Tesla hadn't been a great moving stock. You can look at the last 5 years and it hasn't really been great, or at least the last 4 years. You know, you had nothing here and one strong finish there. A lot of weakness here. It was down 60+% that year. It did double, triple this year. It went from 100 to 300. So I mean, that's good, but the price action was just in 2 quick spurts. And then this past year it was down, kind of hanging in there, and then it really opened things up on earnings in Q4, and that's where this massive move hit. So it hasn't been something that's been a straight line. You look at Meta, you look at Google, you look at, you know, Nvidia and some of these others. They've been like this the last 3 to 4 years. This one looks nothing like that. So having said that, this key range right here, if we look at a 100% downside target, it does point us to the 280 level. And 280 is where it broke out from here. So is this impulse move here pointing us to a return to 280 and giving back those gains. So just some things to keep an eye on with Tesla here as we move forward, but a great key range to work off of here in the meantime. So we're still hanging on to these gains right now. New highs here for the YM, took out the previous week's high. You have the ES and the NQ hanging in there, although very muted price action so far this hour. Not anticipating a heavy sell-off to end the day. If it's been this bullish and held on and you have this great check mark to begin the day, I would anticipate the next pullback might be as deep as 60.45s, rising VWAP, and then we kind of hang in here into the afternoon with an upward bias into the close. So that's the thought process as we head into the end of the day. We may see a pullback to VWAP during the lunchtime hour here and here and here. We almost got one there. And then that could be followed with another rotation back up as this thing trades back and forth with an upward bias. So a fast start to the day here and to the week. A lot more to get to as we head into the afternoon later on. I will be around this afternoon for our afternoon session and a lot of prep time here heading into tomorrow's monthly outlook. I'll also be posting a schedule of events to come up ahead for our Discord boot camp and for Masters, PivotBoss Masters. So for those of you who are newer to PivotBoss Masters, welcome as members. We'll be hosting live sessions here coming up. I think first, before we get to that, we will be doing our Discord boot camp, the first boot camp for Discord. We had a bunch of them for our EchoFin trading room, many of which are still available here, but we'll be redoing some of that content for our new Discord room. So a lot to get to here as we begin the new year. Very excited about it. We'll be back at it here in a little while. Right now, trending up at the moment. Maybe one counter trend fade with an upward bias up ahead. I'm going to leave it there for the morning. If I didn't get to any of your questions here, we'll be back at it here in a little while to continue this thing. Everyone have a fantastic rest of your morning. I'll see you in the room. Take care.